Tesla closed Friday's session up 10%. And with this weekly candle confirming the way that it did, we are looking like a breakout is easily going to happen within the next couple of weeks. And my plan in this video is to share with you how I've been trading Tesla, where I think this is headed in the next couple of weeks. And we're also going to go over some unusual options flows that hit the market last week and Friday. My name is Peter DeCarlo. I've been a full-time trader for the past 10 years. And my goal is to share with you how I've been consistently able to beat the market each and every single year using a very simple strategy that only wins 60% of the time. Now, our initial interest on Tesla in the first place was because price action, even though price had pulled back close to 50% from highs to low, was still bullish. Structure, even with that pullback, was fine. And normally when we pull back into these levels within bullish structure, it means that we're trading at a significant discount and that institutions will normally enter into the stock to save the overall trend and structure. And that's exactly what happened with Tesla. In last week's video, we talked a lot about earnings and we said that the numbers were going to be crap, but that's not what matters. What matters more is Elon's involvement in Doge and how fast he can get out of there and back to Tesla. We talked about how important it would be about a new potential model, a cheaper model for a vehicle, and also the developments of supervised and unsupervised FSD robotaxi. So as of right now, they are actually running an open version of supervised cybercabs and robotaxi networks within Austin to current employees. And so it seems that that is already underway, which is great. And now the next aspect is going to be unsupervised. After that bounce, even though numbers were bad, we saw Tesla from week low to week high rally about 30%. And to make things even better, on the 23rd of April, which I posted not only to our Discord community, but for free on X, that we saw a huge institutional alpha gold flow alert that hit the tape. If you want to learn how to read this flow and unusual options orders in detail, go and take our free options flow mastery guide. But what made this flow so important in short was the sheer amount of volume to open interest. Volume is the amount of contracts that are traded within a single day. Open interest is the amount of contracts that are being held at one time. And so if we see equal open interest to equal volume, that's not really unusual. But when we see an open interest of 5,000, meaning 5,000 contracts were only being held across all investors on that contract, to in a single day on February 23rd, 38,000 contracts were bought and sold, that is very unusual, especially since the flow was confirmed as buys. Something else to notice is that the actual price of this contract has continued to go down. And so when we see a downward price action with a ton of buying pressure, that is called a divergence. And this is very important in the options market because the options market 95% of the time is not going to affect the underlying stock, which means that we can see what institutions are doing before the move happens. And that's why I posted this to the community. And it's also why I took the position. If we go into our trading journal and we just search for Tesla only, you can see that in the past 2 years, we've made $1.77 million with a 64% win rate and an average win-loss ratio of 3-1. And this week alone, we closed in realized profits, meaning closed out, not holding any of these positions anymore, because all that matters is what you're actually keeping, not what you're holding. And the biggest one was Friday's close. So here on the 23rd, you can see I ended up following those call options. Ended up closing that out way too early for a $12,000 profit. And instead of averaging down on my 2026 December calls, I decided to go ahead and buy more December 2026 calls. But instead, I decided to purchase them for a strike price of $240 versus a strike price of $350, significantly further in the money because $350 is way out of the money. I decided to close those just in case price action rejects here short term. And as we go into the chart, we're going to talk about a little more what's going to happen this week into the next couple of months. But I still have a ton of exposure to the upside on Tesla. Now let's start by zooming out on a monthly chart. This is one of those time frames that very little traders and investors actually use, but I promise you guys, if you start using this time frame, it will change your life. Any areas that I have highlighted in blue or are considered zone 3 are areas where the monthly market bias is red. And this means that there is a ton of institutional selling. There's normally not going to be enough buying pressure to come in to actually push the stock up. And expansions are really the only thing that we want to be focusing on. Now, you will see that the current area that we have highlighted is highlighted in red, and we're going to explain that in a moment, but we do not have zone 3 on the board. The reason for this is because even though the current month is showing red, this monthly candle has not closed. We still have 3 more days before that happens. And if Tesla can continue to run into the rest of next week's session, that close could end up being green. So if the end of the month happens and this is red, I will probably reduce some of my exposure to Tesla, or at the least not average down on those longer dated calls. But we have to see what ends up happening. Since the BX is still green and not confirmed red, this means that we can now move into the weekly time frame. Now that we're in the weekly time frame, you will see that any area that does not have any markings are areas that we want to trade. As always, it does not mean that we're always going to win, but these are the types of expansions that we are looking to play. And even looking at just the past 6 to 12 months, you will see a direct correlation between the zones on the screen here and our profit and loss on Tesla. For instance, the first major trade that we took was from May, June, July. This would be considered zone 1. We had a couple of trades here between September, which ended up having a pullback. And then we had another big rally here from October to January. And these are the areas that we want to be focusing on, because it's not enough for a stock to be trading at a discounted range for me to enter a position. I need to know that bigger players are entering the market, because that's what's going to move the price higher. If we search for Tesla results, once again, you can see that this lines up to perfection. We really made no profits and barely traded Tesla at all through all of 2023 and early 2024. Once again, because we had a lot of zone 3s or red monthly biases. You'll notice that our first massive jump in equity happened from May through June and into October. Here we made $798,000 on just this rally. We have another small bump in November, but then another massive win, basically doubling the profits that we had from the month of November all the way to the beginning of January, which obviously was this massive expansion of about 100% within 85 days. And so my core philosophy and what I teach within my Discord community is that we only want to focus on the most potent windows of trading, no matter what the asset is. Could we have made money in these red zones or in these blue zones? Probably. But is it going to be worth tying up capital when we're looking at it from an opportunity cost standpoint? Meaning that we could be doing better things with that capital than holding or trading that asset. In order for zone 1 to happen once again, we really need this BX trender to turn green. And you can see that that has not happened yet. So this breakout to all-time highs has not confirmed just yet. We have about one more week where we need this thing to continue to push. But that said, we have seen multiple weeks in a row now, 1, 2, 3, where the BX trender is showing higher lows. And this higher low, or bottom of a bowl sign, means that buyers are stepping in. We just need more to actually push momentum to the upside. And so looking at this, I think that this is definitely worth trading, as I have been. And even though it's a bit early, the risk versus reward was off the charts. I mean, from $240 up to all-time highs is a 100% move. Breaking down to a lower low is a 12% move to the downside. That means that we are risking basically 12% to make 100%. And that gives us a ridiculous risk versus reward ratio, which is all that matters. People focus way too much on trying to not lose and getting their accuracy as high as it possibly can, when the reality is profitability does not matter when it comes to how many times you're right. What's more important is how much money are you losing every time you lose, and how much money are you winning every time you win. That is what actually matters, and it's where a lot of people fall short. Now, if we move into the daily time frame, you're going to see that these areas are still being overlaid. And another way that you could look for potential early entries is waiting for this daily BX to turn green. So on April 23rd, when that flow hit, you can see that the daily BX also closed green. This is an early entry, but once again, with risk versus reward so high, that's fine. You'll see that price has rallied since then about 16%. Now, as far as my positions and my outlook for Tesla, I do believe that within the next 3 to 6 months, we can easily be trading our way back up at $500 to $540. But there are a couple of things that must happen in order for that to happen that would actually raise my confidence. And we already went over both of them, but just to wrap this out, let's do it once again. The first thing is that this weekly BX trender needs to close green. That will not confirm until next Friday's close. So if this were to close green, that brings our success rate of this breakout from like 60% to all-time highs to maybe 70%. The other thing that also has to happen is I want to see the monthly close green. I don't want this red. So this week is very important. Now, a lot of you will ask, well, what prices is that? What price actually has to happen in order for those to flip? And the unfortunate answer is there is no specific price. This is all based off of momentum. So if momentum continues, whether the price goes up 1, 2, 3, maybe even 10%, the momentum and buying pressure needs to stabilize and continue to come in order for that to flip. So the only way that we can confirm that is waiting till the candle closes. No matter what, I feel very, very good about this setup. And even if we lose, it's not the end of the world. As we said before, and as I teach every day, we do not win all of the time. In the past 2 years, I've taken 3,000 positions with 2,000 winners and 1,000 losers. Now imagine if I was unable emotionally and mentally to take a loss. We would not have as much success as we've had, not only within my career, but specifically within the past 2 years of showing you guys this exact system. And what really kills people is the deviation from the system, most importantly, when things go wrong. It is very simple to stick to a system when you're winning. It is very hard to stick to a system when you're losing. That is the most important time. If we look at the month of April, we are actually up $22,000. But look at the first week of the trading month. Thursday was the biggest loss of my career. Tuesday, the 8th, killed us. The 10th killed us. And at this point, we were down $50,000 for the month. And if I would have deviated from the plan, there's no way I would have made my money back. And I need you to understand that institutions want you to deviate from your plan. They want to manipulate you. The media and the news does not care about your future. They want to manipulate you to buy at the most premium price that you possibly can so you can get stuck with the bag while they let the stock sell off of a cliff only to buy it back where it was just a couple of months ago. And you can see this happen multiple times just within the past 6 months. We had this institutional rally in May where it ripped 50%. And then just 1 month later, they could have bought once again for $180. If we go back to October, they were buying between $225 to $240, selling at $480 to $500, letting it sell off once again. And now they get to buy right back in when they bought in October. And so it's very important for you to understand not only these institutional support levels, but more importantly, what are they doing when it comes to buying pressure? You cannot focus on what they are saying. You can only focus on what they're doing. And if you want to learn that, I have an entire course library down in the description teaching everything that I have learned in the past 10 years completely for free. I highly recommend starting with the How I Made $4 Million with Just One indicator, because this is going to show you how to use the BX Trender, which we just went over, and how to understand institutional buying. I hope this video helped, guys. As always, from the bottom of my heart, it truly means the world to have your support, and I hope to see you next time.